Well, Ryan actually just told Becky a moment ago in that interview he thinks that Powell might have been held off from tackling it sooner because he hadn't been reappointed yet.
Well, yeah, I don't know if that's the case. Like there are 18 people that essentially set monetary policy for the world, and while their knee-jerk reaction to the COVID outbreak was, let's say, necessary, but in the end, clearly printing 40% more money than was in circulation in the first place was a little too much. And now they're really struggling with how to take that back and how to take it off the balance sheet at the same time in which there are two things that they can't change. They can't change the global supply problem for hydrocarbons, which has been based upon, call it, a decade of bad policy, and they can't change the price of food. So we're going to see energy and food prices march higher over the next year. And we're going to see the economy cool off. And you already see Fed Funds futures telling you that they're going to have to cut rates sometime in mid-2023. And I agree with that.
You do agree with that. So, yeah. I mean, I guess for a lot of people, they would say, well, wait a minute, why bother raising rates just to cut them again? So do you think they should back off now? Or is the risk that, you know, the market's so quick to change narratives that they'll kind of signal to the Fed that they ought to be more dovish at the very time? I mean, we're still so far below neutral. We're way below neutral. Nominal GDP is still strong, like you just said. There's going to be this food and energy imbalance for some time. So explain what you think the Fed should do here.
Well, when you think about neutrality in Fed speak, when you look at what the minute said yesterday, the Fed staff still believes that we're going to have a 2.8% GDP growth year in 2022. You know, I just don't see that happening. You had Q1 at minus 1.4. You'd have to average the next 3 quarters. Will have to average over 4% growth to hit the Fed staff's target of 2.8. So that's just not going to happen. So I think that we're in a scenario where we have a stagflationary environment. I think the economy is going to cool off. And we will have I think we'll have a recession by the end of this year or the beginning of next year. And we'll still have rising food prices and rising energy prices. And unfortunately, the Fed's monetary policy just can't change that. I believe that the amount that they can raise rates is indicative or kind of anchored in the delta from the base and not necessarily equalizing it with, quote, the neutral rate. So I don't think they're going to get much over 200 basis points in hikes before they have to pause and turn the other way.